first off, a round of applause to these presenters and Metastock for allowing us to present. Fantastic. You know, Metastock does this often. They really help educate traders around the world. I think it's just great what they do. And I tend to do the same thing. I show up at these and I just try to educate traders, try to give you an edge that maybe can help you think about and trade properly moving forward. My name is Oscar Carboni. Some of you know me, some of you may not. You will get to know me after this presentation, I assure you. I run the Omni Trading Academy. You can find me literally 24 hours a day at livewithoscar.com. When you get there, you'll find me in my live trading room, like I am right now, waving to you, because I'm always here, even when I do presentations. So you can join me here. Traders from all over the world gather. This is Live with Oscar. I traded on the floors from an 18-year-old kid till I was in my mid-40s when floors went electronic. So I started there as a kid. And when we went home, they sent everyone home with a laptop and said, now do this from home. And I went, not a chance. I'm creating a trading room, and these people are going to hang out with me. And every day, like I did on the floor, I'm going to have a crowd around me. So this room, it's free to anyone who wants to join. And it's basically live your life looking over the shoulders of a professional Wall Street analyst and trader. So come join me anytime you want at livewithoscar.com. No credit cards are required, nothing at all. You'll just fill out, of course, a questionnaire. Very simply, go to livewithoscar.com. Let me just show this to you now before we get moving. So we're just going to go to livewithoscar.com. It's very simple. You will literally either log in or register. If you're not a member, you'll register. You will fill this out. It is nothing. I promise you, when you get an email back, it's going to go to your spam. Unspam it, click the email back, and in moments, you can join me in my free live trading room, and we can live our lives together. So I hope you do that. And now let's see what is going on out there. One of the things I like to do is take a look at where markets are now, where they should be going, and what we could do about that for the future. So what I'm going to show you in this presentation is exactly that, how powerful technical analysis is, how great you could be at calling markets if you just understood that a chart is actually a visual look at everything that's coming out. Reports from the government, whether they've been released or they're getting released. It is every bit of news that ever happened, geopolitical or you name it, and it is traders' reaction to such. All of that shows up on a daily chart. And if you read that chart properly, I promise you, you will make the best calls any analyst can make, because that removes your personality from these calls and allows you to use a pure chart. And stuff like that is what we're going to go over for the next hour. So I have done webinars in the past, of course, for Metastock. And let me show you one of the most wonderful things that has come from doing these Metastock webinars. In October of 23, the price of NVIDIA was $1,050 per share. This is NVIDIA. And I said, before the split, and I said, at $1,050 per share, how are we supposed to get in? The normal humans on this planet, what are we supposed to do about this? So I went on a shopping spree back in October of 23. And I did a webinar for Metastock, and here's how that webinar went. So what we're going to do is we're going to go over what I created, this AI portfolio, offered it to all my Metastock Omniacs around the world, Metastock followers, traders around the world, and said, if you follow, get involved, grab these lower priced stocks. They are a fantastic alternative to the too expensive at the time, $1,000 NVIDIA. And I mentioned, I hope these cheaper alternatives allow you to participate in the AI revolution, as NVIDIA is too expensive, right? So it started like this. Welcome to the AI revolution, traders. This young industry is just getting warmed up. It's going to push the markets higher for years to come. And then I mentioned, this is my first webinar way back in 23. And then I mentioned the computer rally, which I was part of before there were computers. We stood on the trading floor literally with a pencil and graph paper and put X's and O's on graph paper. That was considered charting. That's how I began. Then the computers hit and we had the computer revolution. It went on for about 7 straight years. After that, I also lived through the internet revolution. If you guys remember that, that went on for about 7 straight years before we had our 2001 .com crash. Now we've got the AI revolution. This baby is only in year 3, and it's only in the 2nd month of year 3. It is a baby. This revolution that usually lasts about 7 years, when something this major hits the economy, a big new thing like the internet or computers, well, the AI, I like to call it a revolution. So the AI revolution, if you will, is absolutely going to take our markets much higher over time. So I did the first webinar back here when Omni got interested. The next webinar was here. We did the next webinar about it here. And in each webinar, what I do is I advise whether we're going to hold on to these AI stocks or kick some out. So what we're going to do first is look at the AI portfolio, and we'll shelve that, and we'll go look at where the markets are now, all the rest of the markets, the stock market, and where it should be going. And I think you're going to find this presentation very helpful to help shape your opinion about where markets are going to go next. Please remember how risky trading is. We never trade without stops at the Omni Trading Academy. In fact, as far as stops, they're so important that the stop goes in first before we ever even enter a trade. Always, 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 protection goes in first before we even enter the trade. At the Omni Trading Academy, we plan a trade. It's already written down, and the next day when markets open, we enact that trade. The stop goes in first. Put your stops in first, traders. You'll live a lot longer in this business. All right, so we had the high flying NVIDIA, and I did webinar after webinar and just kept saying whether or not we're staying in these stocks or we're going to get out of them. So let's go look at that series or my AI portfolio first. Started with this chart. You've seen it. Fantastic hold around the 200 bar moving average every time it gets there. Gotta love it. Let's move on to alternatives though, because that is what we can afford more so at the time, of course, than the high-flying NVIDIA. So one of the stocks I introduced was AI.Q or AIQ.O, excuse me, the AI play. It's the Global XAI Technology ETF. We started liking it here. Omni gets interested, did a webinar. Another webinar to tell you to hold it. Another webinar to tell you to hold it. We still like the AIQ, stays in the portfolio, but you want to see something really interesting. You know how simple Wall Street is. Everybody's got that. You know, everyone thinks it's so complicated. I grew up on Wall Street, kids. I was there from a child till it went electronic. I can tell you so much about what they use, and so much of it is so simple. Nobody would ever want me to show things like this to you. But you want to see what they use to make life simple on Wall Street, even though they're going to put out some article and tell you how complicated things are when they decide to buy or sell. Let me show you the simplicity behind what gets used. It's all about market geometry. You want to see a fantastic example about how well market geometry works. See this green trend line right here? Big, long green trend line. Well, did you notice on that trend line, have you noticed that every time we get near it, Wall Street comes in and buys it? Right? Started here, and then every time you got near it from that point forward, Wall Street decided to buy it. Now let me show you just how simple that is. Watch this. This is a trend line that only went from this low here. Let me just grab a little tool. I went from this low to this low and said, extend that trend line. Right? None of this existed. Watch this. How did they know to come in and buy that right there? How did they know to buy it again here? It's simple. They use market geometry. I promise you, kids, they use jargon on Wall Street, and you've got to learn about the EBITDA, and you've got to learn about the float, the insiders, to drive you crazy. So you send Wall Street their money. I promise you, the techniques are way simpler than you might think. They program them. They use algorithms. Yeah, it even sounds scary and sophisticated. They're programming in the geometry. It's so simple, I promise you. Watch this. Want to see them do it on the top as well? They use the same thing up here. We had a trend line from here to here. Watch what happens when I extend the trend line. Boom, it hits here a bunch of times, in fact, right? It hits here a whole bunch of times, hits again here, fails, and finally they start using it. It doesn't work, and it starts to fail again. It is called geometry. It is what Wall Street uses. Yeah, again, they'll program it into an algorithm, but that's it. It's not only that, but that's so much of it right there. This stuff is so simple. You'll see as we do this webinar. Don't let Wall Street scare you and think things are complicated. Let's go to the next one. All right, so the next one is the AI play BOTZ. Check this guy out. BOTZ, we got involved right here. We loved it, started doing webinars, and in those webinars, we said, okay, maintain, hold your positions. Next webinar, hold your positions, we maintain. But look at how simple this one is. Look at this orange average, right? A lot of respect being paid to this orange average. When it gets there, you react. I mean, that is it. If you don't see that, you're not paying attention. The simplicity behind what Wall Street does would knock you over if you understood it was that simple. Every time we get there, you see how they buy it? And watch this. Now we get under it. Under. We go back up. What's it do? It sells again right there. Down again you go. Right? Gets above, they buy it. Gets below, they sell it. They just work this average like crazy on BOTZ. Wall Street's not that complicated. You just got to figure out what they're using. I promise. Hang out with me. I'll be able to show you all these tricks. So what else do we have out there? Let's see what else showed up on our AI portfolio. Next guy, the Franklin Intelligent Machines ETF. Albeit support just got tested, but support works. That's the geometry I just showed you about. So I didn't even want to mention support in this chart. I wanted to show you something else, but being that it just showed itself, let me show it to you. Watch this. Trend line, right? Starts here, goes to here, extends forward from this point. Look what happens when the market comes down and hits that trend line. Do you know what it did? Look, it went right back up. It hit that trend line and went right back up. Now, that doesn't mean it's going to stay going up, but you see how Wall Street reacted immediately off the geometry? Simple stuff, kids. You just got to know what they're looking at. So support is being tested right now. As you can see right here, this is their support test. So far, it went right back up as soon as it hit the support test. Support. Right? Simple stuff, right? So this is another of the AI alternatives to NVIDIA. It's only $64, but when we liked it, it was $40, right? It was down here. It was in the 40s. It's all the way up in the 64 area now. Same thing with just about every one of those AI stocks that we put in this portfolio. Let's continue to look at more. All right, the next one we are going to look at is Lupe. Guadalupe. Come here, Lupe. All right, so the Loop is, it's LOUP.K. It's an AI play called the Innovator Deep Water ETF. And I'll tell you, this thing just goes. So we started liking it back here at the Omni, started to do webinars, keep it, we love it, keep it, we love it, keep it, we love it, hold on to it, we love it, support, watch this. Once again, geometry. This trend line is the resistance area or the support area. This blue trend line just depends on if you're above it or below it. So what does Wall Street do? Gets to that trend line yesterday, gets under it today, right back above it again. Buying came in at the geometry. Isn't that interesting? Support being tested, geometry being tested, call it what you will. Now, look inside this channel. Fantastic channel, this orange channel. We fell out, testing support. If it holds, right back into the channel, we will go. If not, you can clearly see what happens. Check this out. You can clearly see what happens if you can't get above the top of the channel, right? Down we go. Can't get above, now we did. So we test the channel, test the channel, test the channel, test the channel. If we can't stay above it, we'll go to the bottom. If we can't stay above it, we'll go back into the orange channel. These ETFs, or AI stocks, it's stocks and ETFs, they are geometrically designed, it appears. I kid you not, it's ridiculous, the geometry on these. Let's go look at the next one. All right, we've got LearnZ. It's LRNZ.K. This one we removed from our portfolio. It's one of the ones that we started with back here. We loved it, and it rallied up, and we loved it till about here. And right here, we recommended in this webinar, there's a blue dot wherever we do a webinar, by the way. See this blue dot? Wherever we do a webinar, I have a blue dot on most of them. This one we pulled out of the portfolio, so no more blue dots. At this blue dot up here, we liquidated LRNZ.K, which we did a video about, and we did a webinar. We called everybody, yanked that one out, and it did actually go down a lot after that. But even the ones we removed have caught up. Even the laggards ended up going up anyway, because we removed 2, maybe 3 out of the 11 that we found. And for reasons like this, when it reaches a technical spot we don't like, remove from the portfolio. So we told everybody to get rid of it, but still overall it did well, right? Look how high it ended up here. So even though we removed LRNZ, still looks good, just not in our portfolio any longer. Traders, this is OMNIBootcamp.com. You're going to hear about that a bit later. Keep that in mind. We'll talk about that later. Let's go finish looking at our AI portfolio first, because enough people are following this portfolio that have called me about it over the last year and a half. Next one was removed as well. WTAI.K, it was the Wisdom Tree AI Fund. We yanked that right here on this date when we did this webinar. Removed from portfolio, and boy, did it drop after that, right? Whoa, bam! But even now, it's higher than where we got out of it. Imagine that, we got out about here. It's higher than that now. So even the laggards in this AI revolution are going up. The AI revolution is here to stay. You've heard some talk on TV in the last couple of months. Oh, they're not going to spend as much money on it. Don't listen. You know what I mean? It's a revolution like the last 2 we've seen. It's going to go. So let's find some other good stuff to look at. We also had the UBOT. UBOT, it's UBOT.K. It's the Robo AI and Automation ETF. And we loved it when we got in down here. We loved it here, and we asked you to remove it from the portfolio right here. So we removed UBOT when we did the webinar. We told you in this webinar, if it breaks the blue trend line, removed, so that we did a video the next when it broke to tell you, make sure it's out. Look at the big drop that took place afterwards. So I'm glad we removed it, but even the laggards have gotten back above to where we got out. Even the laggards in this AI revolution are doing really well. Make sure you own some of these. Make sure you join my free website. It's free. Join my chat room. I told you about it, right? Make sure that you spend your life in here with me so we can go over all this great stuff every day and make sure that you're in tune with markets. I'm in tune with markets till one of us doesn't get up in the morning. So make sure you're here. All right. What else do we have? Next guy is the Think, it's THNQ.K on Metastock. Check out this support test. Check out how obvious it was. We had the channel comes in from here to here. So now you have a channel. They come down to that channel. They hit it one day, and what happens? Right back up off the channel. So the support got tested. Doesn't mean it held yet, by the way. You need a few days to hold support and go. But first day in place, so far so good on ThinkQ. So look at the channel we're in. It was operating in this geometric channel here. Right? It was going from the top of the channel to the bottom, to the top, breaks out of the bottom for 2 days, gets back into the channel, uses the channel, finally gets out of it, which means this new channel got created, the new darker blue one. So here we are in a new channel, testing the support. You see the geometry? Simple stuff, right? Use geometry, kids. It'll help you so much figuring out where markets are going to go next. What else? We have Quantum. Defiance Quantum. It's the QTUM.O ETF. Look at the trajectory on this thing and just look at the insanity inside of this channel. Listen, once again, I'm sure there's an example. There has to be an example here. It looks like one. Oh, yeah, for sure. Look at the example of how well the geometry works. We like it here. Goes to the top of the channel, which, by the way, that channel was established back in past history. It's just the channel moving forward. Hits the top of that channel, hits it again, drops to the bottom, finally gets out above the channel and breaks out. So the geometry really does work. Make sure you're paying attention to that. Moving along with the AI revolution is this quantum. It looks so good right now. Yes, nothing goes straight up, right? None of these things go straight up, but they sure are doing really well compared to where we started liking them down here. Is there anything else in our portfolio? Yeah, there's the last thing I wanted to show you in that particular portfolio. One of the things I also mentioned, and I want you to remember this chart right here as we get towards the end of my presentation. This is the commodity index. It basically is the measurement of inflation and or deflation, but we call it the measurement of inflation. During COVID, the height of this inflationary indicator was at 140.55. We are residing at 104.62 at the moment. 104.62. That is an enormous difference from where we were just a couple of years ago, right? So we went from 140.55 down to 104. Now, here's what gets interesting. Remember this chart for later. See the double top right here? Let me see if I can pull that in there for you. See the double top and the reaction back down from that double top? This is an inflation indicator. This is showing us that inflation's hit a moment, doesn't need to go up any higher, and is backing off. Inflation is a huge component to whether or not the Fed raises or lowers interest rates. Keep this chart in mind, and then we will move forward. So remember this for later. Now, traders, some of you know me, some of you don't. If you don't know this, I put out a YouTube video just about every night. And in that YouTube video, it basically tells my traders, my omniacs around the world, what should happen the next day. Sometimes it's a video made for 2 days, but usually I do a video each night on YouTube, send it out all over social networking to tell my omniacs what's going to happen the next day. Then they watch the video, they come into my live trading room, and we actually act out the exact trades that they heard about in the video, and I've sent them through my flash update system. So the videos, if you've never seen them, I'm going to give you a quick, just a few seconds of it. They basically look like this. Commercial, sorry kids. That I couldn't help. Back to where we are. Thank all of you for tuning in to my 2,869th installment of Short-Term Trading Live with Oscar Carboni. Note the date. I filmed this on February 19th. Put it out on the 19th for traders that are going to trade on February 20th, which is a Thursday. So I put it out on a Wednesday night. And let me show you what the topic of this video was. I think I have it where it'll be very quick for you. Let's see, we should get to about here. All right, right about here. I'm going to play a quick blurb for you. For trading on Thursday, I'm going to tell you this, traders, regarding the E-mini S&P, the NASDAQ, and the Dow Jones Industrial Average. Watch out for double tops because double tops produce market drops. That is an Oscarism. You've heard that from me for 25, 30 years now. It is absolute. Okay, Wednesday night, I came out with a video to say, get ready. Market tops produce, well, double tops produce market drops. Get ready. And the chart I showed them was the NASDAQ chart. So now we did that video on Wednesday night. This is the day we did the video, right here on Wednesday night. Look what happened the very next day. Thursday, Friday, Monday, Tuesday, Wednesday. It was exactly what took place right after the video. Double tops produce market drops. So that was the information in the video. And as you can see, it is exactly what happened. Now, some people say, Oscar, it wasn't quite a double top because you only went left side, you went up, but right side, you missed. So what I did that night before I put up during the video so that you guys would see it, I showed you 4 different types of double tops. I showed you double tops that miss, like this one. I showed you double tops that get really close and still remain valid. I showed you double tops that actually blow through even higher, but still remain valid. And then I showed you the NASDAQ double top and said, this is it. We start to go down from here. Look at the double top reaction so far. You could not have asked for a better moment, a more timely video, or better analysis than that. And the Omniacs did really well for a few days right after that drop. So now we are going to go and take a look at the chart that started this whole double top mess. Because what we have right now, stopping our markets from going higher, are double tops and head and shoulders formations. And I promise you, whether you believe in these or not, Wall Street knows what they are, and they also know how to use them. I know what they are, and boy, do I know how to use them, and so will you. So NASDAQ daily bar has the double top, but really the one that started this whole thing was the Dow. This double top started it all. Watch this. We had a double top, and I did a video the night of the double top, by the way, and said, traders, here we are, double tops. When we see a double top, we sell a double top, and down it started to go almost immediately. And we've had this big spill off since. This was the first one to hit, and if you note, this hit exactly. The highs were exact, right? You had a top, boom. The other top went all the way up, hit it exactly. Unlike the NASDAQ, which was close but not quite, still remained valid. Down we went. So it all started with the Dow Jones Industrial Average, double top. NASDAQ didn't have one yet. Dow Jones was the only one that had one. That was it. We made the call. The Dow is the market. This is the one that started it all. So then we have this guy. And that should be about here, the E-mini S&P. Like the NASDAQ, it didn't quite get there, but the E-mini S&P is basically just a representation of the Dow, only with 500 stocks instead of 30. All right, the Dow got there and started to drop. S&P doesn't have to get there exactly, which it didn't. And we did the double top call. Double tops produce market drops. Sell a double top when you see a double top. And the double top reaction started. So that's your second one, right? You saw the Dow, you saw the NASDAQ, and the E-mini S&P. And then we had this. I also gave this to you as an example. I think that's right here. I said, now look at this example. This would be your Bitcoin double top. And yes, you hit here, but look how you went through on this one. Did it still remain valid? Yes, it was still a double top, and down we started to go. What makes Bitcoin worse at this point is that, do you see this long trend line right here? Hold, hold, hold. One day through it, went back on the same day and settled all the way up here. That's a hold. So that held as well. Then it starts to get through, and once we get through right here, this big trend line, it starts to go down. What else is there? Get rid of the trend line if you want. Let's move it. Let's move this out of the way. Look at this average. This average is just perfect on Bitcoin, absolutely perfect. And look what happened right there when it finished itself off. Down we started to go. So the analysis works really well. Simple analysis works really well if you understand it. Now, there is this. I run something called the Omni Oscars Market Navigational Indicator, which gives us exact buys and sells, where we're getting in, where we're placing the stop, where we're taking profit. That you have not seen. In honesty, I would never show that to the public. I only show the Omni to 3 or 4 people at a time here in my home office in Las Vegas called OmniCamp. We'll get to that, but that's where you'll learn Omni. Yes, all these great trades I tell you about, I never show them to the public. If you got a system that works, you don't show it to the public. You don't sell it. You don't mass produce it. You keep it to yourself. You only teach a few people. You cannot find Omni anywhere. It's never been mass produced. It never will. It's never been recorded. It's not on Zoom. It's only taught in my home office here in Las Vegas. So it's not exactly this. This is part of it, but the Omni is much more accurate as far as exactly when we're getting in and getting out, where to place your stops. It gives you a day trade every day. This is the analysis that hovers around the Omni that I'm showing you guys. In other words, this is my technical analysis 101. Right now, I'm in pre-kindergarten. I'm laying down on a cot. I'm drinking warm milk and cookies. That's the analysis I'm showing you guys We could get more complicated, but there's no need. The simplicity is what works. All right, so let's see what else we have out there. Then we're going to go back to that NASDAQ chart just for a moment, because let's look at it again. You've seen that you don't have to hit. You've seen in Bitcoin that you can hit all the way and go through. And then you've seen in the Dow that it could just be exact. So double tops can look like almost anything as long as it's there and it starts to pull back. So back to that NASDAQ. This was the last one to go. This was the last double top to finally install itself. It missed by a little bit, but the timing was right on. The Omni turned red right there at that green bar, and down we started to go. So we know now we're in the throes of double tops. That is that. There's no way out of it. It started a market pullback. What else is there to look at, though? Check this out. It's not just double tops. Look at this Russell 2000. This is the daily Russell 2000 with a massive head and shoulders formation. Left shoulder, head, right shoulder, and anyone that follows the Omni has seen all of these charts for the last few weeks in my nightly videos, right? I show you guys all of this stuff. Just want to make sure that everyone's always aware. So I show the head and shoulders, basically said now we could expect the downside the same day, the very next morning. In fact, I have to show you what this chart looked like. I'm going to delete a few bars. The very next morning when NASDAQ, after the video on Wednesday night, when NASDAQ cracked, this is what the Russell looked like. And I did the video, and the next day that happened. And now we're below the right shoulder, making the head and shoulders valid. Who else has one? The transportation average. Now, the Dow Jones transportation average, I deem, well, Charles Dow, remember that? The stock market is called the Dow Jones, right? After Charles Dow. Charles Dow came up with the theory that the transportation average, in most cases, is the leader of US indices. The market's named after him. The whole industry does the stuff that he has created. I say his theories are correct. And then, of course, I went and studied the Dow theory, and I have to say, the guy's right. Give him credit, boy. That's why we named the market after him. The Dow theory, basically, one of the layman's terms about it is it works like the tides going in and out of the ocean, and it produces the transportation average as a leader. Well, the transportation average was the first one to mark a head and shoulders. Then it did something we like to call an Oscarism at the Omni Trading Academy, and that is a fake head test. When you have a head and shoulders in place, left shoulder, head, right shoulder, and it looks like you're about to go down, it reverses and does what I call the fake head test. Does not get above the head. It's a fake test. Back down you go, and it validates the head and shoulders. That's now been validated as well, and it's the leader. So I've shown you some really interesting, ugly looking daily charts, right? It looks like, if you ask my technical opinion right now, I expect the markets to crash by what I just showed you. And I'd expect that you would think that too. So let's take a look a little deeper at what we're looking at here, and let's do this. Now you've seen the picture. Daily, we are going down. We are correcting. The market is adjusting. Don't forget, when you're lowering interest rates, market goes up. When you stop lowering interest rates, you have turned off the music, the party stops, and everyone starts to leave the party. The party's over. This is an old adage. You guys have heard it before. When the music stops, the party's over. Well, that refers to the Fed raising rates, market goes down, lowering rates, the market goes up. When they're lowering rates, if they stop lowering rates, it's almost as good as raising rates. The party's over. They turned off the music, and down we're starting to go. That's called a market adjustment for the fact that we're no longer lowering rates right now. Markets, stocks are very, very rate sensitive, especially the stocks that are in debt. You talk about rates stopping from going down, charts are going to show the market wants to go down a little to adjust. So you've heard that, you've seen the dailies. Let's do a little bit of a sea change now. Now that you've seen what looks close up front and looks pretty scary, let's see if it's that scary. Now we are looking at the worst of all the charts, the Dow Jones Transportation Average. It's the worst head and shoulders. It's got the worst look. It started this down move, and it looks terrible on the daily. But you're looking at a weekly right now. Longer term, does that look scary to anybody in this room? When you look at this chart, do you go, oh, that's the worst bull market I've ever seen? You do not, right? I wouldn't if I looked at that chart. In fact, look at that big channel. It's pointing up, not down. Right, we're going up right here. So weeklies do not show us that we are in a crash, not a chance. We are correcting. So don't get worried about what I just showed you. Look at this, watch. So the transportation average on the weekly is the worst of all the charts, and that doesn't look terrible. Look at this one. This is the Dow Jones on a weekly. Who would look at that and call that a bear market, a bearish market, a scary market, a broken market? Who would call that anything except for a market reacting to a double top? And you got to get a reaction when you get the double tops. These things happen. All right, so now we're getting a reaction. But looking at that chart, I mean, who would look at that and call that bearish? Nobody. Longer term charts are stable. Let's go look at something else. And that's 1, 2. Look at this guy. Look at your NASDAQ. Does anything look wrong with that besides it just doing what charts do, or markets, which are, they don't go straight up. They go up, they come down, they go up, they come down, they go up, they come down, up, they come down. All right, it went up, it's coming down. Does not look like the end of the world to me. So if the first part of this webinar got you nervous, don't get nervous. This looks pretty good right now. Can things change? Absolutely, things can change. We could get bearish like that. I'll be the first one to point it out to you, but that's not where we're at, kids. If you're putting on long-term positions, don't get nervous. Don't get out of your 401ks. In fact, you can add to them during this dip. At snapshot right now, where the world looks, you can add to it. And I'm going to give you more proof before we're done at why you don't have to worry about a big crash coming. And then there's also this guy. You've got the E-mini S&P. E-mini S&P on a weekly, I am telling you right now, this bull market remains intact. Looking at this picture right here. Can the picture change? Of course, you've heard me say that. You're a trader. You guys know picture can change like that. Has it? No, it has not. We are merely doing what normally happens when the market finds a reason. This will happen. And then back up. When it finds a reason, this will happen. And back up. When it finds a reason, the bull will release a little bit and then back up. It found a reason. They stopped lowering rates right here. It's a weekly chart, right? They stopped lowering rates right here. It found a reason. All right, technically it's going to go down. Fundamentally, it's going to go down, but it doesn't look like it's going to go past here. If it does, we'll revisit. Don't worry about it. So, from what I've seen so far, yes, the dailies are showing us what I just illustrated to you, that we do have some downward movement coming. But the weeklies show us, don't get nervous. It's just doing what it does, this thing called a market. It doesn't go straight up. If it did, we'd never get in, right? You can't get in these markets when they go like that. You need pullbacks. They're healthy. So that's what I'm seeing so far. Now, is there more proof? Absolutely. You think I don't watch everything? Watch this. Let's go to this chart. This is crude oil, traders. This is a weekly chart of crude oil. As soon as we got above, see this red line, red trend line, red trend line, red trend line, and the average come together. Now they are riding exactly together. As soon as we failed right here, I did a series of videos and immediately posted, and it happened on Trump's election, by the way. This is called the Trump trade. It failed right here at the normal spot where it will hold. Failure, right? It usually fails, fails, fails. It looked like it wanted to hold. Failure. I put out the video right there and then. Not only did I put out a video, we were trading at 77 in crude, and I said, now we've got two projections. The Trump trade will bring us 55 price of crude, then ultimately 47.50. We were at 77, traders, and it looked like it was going up, not down. And now we're trading at 68. And how great was that call so far? But there's a reason for this. If crude is going lower, you do realize that that helps every company on this planet that ships anything, anywhere. That helps just about every driver on this planet. That helps every shipping company. That helps every product. Why? Because if you build a product somewhere, you've got to get raw materials to that spot, transportation to get it to that spot. Then you build it. Then you've got to transport it to either a distribution warehouse or to the retail or to wherever you sold it. Guess what? It's got to be transported again. Then the retail has to transport themselves to the product to grab it. That means if there's lots of transportation going on and the price of crude is cheaper, it helps everybody. Now, there's this big talk about EV, EV, EV. Thank God we got rid of the crazies that were just in it trying to make EV only, because there's only about 10 to 12% of this planet on EV. The rest of us, mere mortals, you know what I'm saying? 88% of us, we use gas guzzlers. This helps all of us. Now, the difference between like a tax cut or anything else and crude dropping is you feel the price immediately. That day, you feel it immediately when the price of crude drops. Everyone feels it. It helps everybody. That's a big thing. If crude is dropping, you know the Fed's going to be able to lower rates again soon, because crude is about the only component left in our inflation, right? We're no longer worried about whether we can get ships moving. All that stuff from COVID, supply issues are gone. We got plenty of worker issues, no problem. The only issue we have right now is the high price of transportation, and that is going to start to come out of inflation. And when that comes out of inflation, something else is going to take place. Now, you got this going in the absolute right direction to help propel the stock market higher. Look what else you got going on. Another lesson, 30-year T-bonds. When 30-year T-bonds are going down, the market is raising interest rates. That is how this works. Did you know that? When 30-year T-bonds go down, the market is raising interest rates. So if the market's raising interest rates, or rates are automatically going up, in fact, better explanation. Bonds heading down means interest rates are going up. Now, this happens by itself, all by itself. In other words, the Fed doesn't have to say a word. Jerome Powell doesn't have to say a word. Automatically, interest rates go higher. The price you will pay to bank for a mortgage goes higher if the 30-year futures market goes down. So bonds heading down means interest rates are going up, just like when bonds are going up, interest rates are heading down. I just showed you that crude is heading down, taking some pressure off inflation. Well, guess what's heading up? Boom, look at your bonds. They're heading up very smartly from here. That means interest rates are dropping. Powell doesn't have to say a word. Just like he didn't have to say a word when interest rates were going up here, whether the Fed touches them or not, the street can move interest rates. I don't know if you know that. So the street is buying bonds, and that's knocking down interest rates. You've got crude dropping. You've got interest rates inherently dropping, whether the Fed drops them or not. Up bonds means down interest rates. So if you've got crude dropping, good for the markets, good for everybody. Interest rates dropping, good for the markets, good for everybody. And you've got, remember I told you, remember this last chart? Remember the inflation chart? Let's go back to it. This is the inflation, the measurement of commodity deflation. I told you to remember this in the beginning, right? Between crude oil going down, T-bonds going up means interest rates going down. The double top that we're witnessing right here, right? You got this double top right here in our inflation index, and that's going down too. That means that the Fed is going to be able to lower rates again. So what will happen in the end is the markets that I showed you that you were worried about are going to go back up, not down. Let them correct. As crude goes down, as bonds go up, interest rates go down, as inflation goes down, the Fed can then start to lower rates again, and this thing will go right back up. Traders, that is my presentation to you. I really hope that you've learned a little something here, or I've quelled some of your panicking fears, because I know some people are starting to panic. Now, if you like what you see, I would love to have you do something, and that would be to join me when I host an OmniCamp. So let me see if I can explain it to you. Let me see if I even have a window here. I probably do. Let me look here. Omni Bootcamp. If you go to omnibootcamp.com, you will get to this page. This page will allow you to just click any link and you can fill out an application. What that application would allow you to do is I would give you a phone call, find out if you qualify. If you qualify, I will invite you to a very rare event that only has a few people at a time. You will be invited to Vegas to spend 5 days and nights working with me, working on what we call the Omni, Oscar's Market Navigational Indicator, and I will teach you the exact system, send you home with a brand new laptop. That laptop is pre-programmed by me with everything that we're going to learn for 5 days, and then there's continued education when you go home. So you're going to show up in Vegas on a Thursday night. Your lodging is included. Your meals are included, vegan, vegetarian, I don't care what you are. We got chefs there cooking just for you. Religious beliefs, you name it, they're cooking just for you. So we're going to put you in, we're going to make sure that you stay at the Omni compound. You're going to get picked up in the morning, get brought to my Omni camp where we will spend the whole day Friday together. Then you're going to go home Friday night. You're going to get picked up Saturday morning. We're going to spend the whole day Saturday together. But Saturday night, we're all going on a field trip and we're going to see Dead and Company at the Sphere. Now, I don't normally hold field trips when I do Omni camps, but I can't help it. This is such a great show. So on a Saturday night, us 5 campers, we're all going to go to the Sphere. I've already got the tickets, and we'll come back Sunday morning. We'll work all day Sunday. We'll work all day Monday. And then once you go home, we'll do continued education if you need it in my alumni trading room. All of that will happen if you go to omnibootcamp.com and fill out your application. Now, it's going to happen in 20 days, just about. It's the 20th of March. We're at the 26th of Feb right now. The 20th of March, I will have a few of you here. You will work with me for 5 days and we'll go to the Sphere, but you got to go here and fill out those applications. Make sure you go here, omnibootcamp.com. I've never spelled Omni in my life without caps, and I will not now either. Never once, it's not allowed. All right, you go to omnibootcamp.com, fill out that application, and I will personally call you, qualify you for a seat. Jeff, with that, unless you have questions, I'm out of here, baby.
Not a lot of questions, a couple comments I'd like to read out to you though from YouTube.
Thank you.
Llama Mama says, Oscar is the GOAT.
Oh, okay.
Thanks, Oscar. Which is greatest of all time, just in case. I know you know that. But for anybody that doesn't know that. Rad in YouTube says, this is gold nuggets being shared by him. I'm glad I tuned in. J Rod says, thanks, Oscar. Great presentation.
My pleasure. I hope it helps.
All right.
All right, so thank you so much. Remember, join me at livewithoscar.com. Come to my free trading room. It costs you $0 to hang out with me. If you don't like me, you leave. It costs you nothing, right? But if you do like me, you got a new friend and a new place to hang out. Jeff, with that, I will yield my time back to you. Thank you so much.